A very good afternoon. You're watching the newsroom right here on ET Now. I'm Ajaya Sharma. The markets are holding on to the gains. In fact, some very interesting pockets of the market are doing well now. Pharma, of course, is doing well, but chemical space has come back after a couple of years now. Increasingly, look at all the chemical gainers. You will see Deepak Nitrite, Balaji, you're looking at Shivalik Rasayan, you're looking at Aarti, all of them are doing very well in trade. But overall, the small cap, mid caps along with the benchmarks are just holding on to the gains, no massive rally coming in over there. Let's take the discussion on markets forward with Radhika Gupta of Edelweiss Mutual Fund joining us today. Radhika, good afternoon. Thank you so much for your time. Radhika, let's start our chat today with the mid cap end of the market, and your fund, mid cap fund, has also gained very sizable because of flows as well as the value going up, because that space has done very well last couple of months. Out of all the mid-cap names, I remember when you launched this fund as well, how are you assessing the valuation? Because you guys, have done pretty well in that space, and also, have managed to do well in a crowded space. Because at that time too, there were about a dozen mid-cap funds, and that space became got a lot of fancy since then. How are you analyzing the valuation? Do you think that this narrative is justified that mid-caps have actually run up very higher than what the numbers actually support?
So, Ajay, hi, nice to talk to you as always. I think our view on mid-cap and small cap has been a little more calibrated than some of the extreme views you have. And as you correctly said, we've been running Edelweiss Midcap Fund for 15 years now, and we consider ourselves mid and small cap specialists at some level. One is you have to understand that what you classify as mid-cap in India has a very unique definition. It's a rank-based definition, which no part of the world has. So mid-cap start at the next 100. I mean, it's the next 150 companies. And truly, actually, most of your market leaders in many segments are mid-cap. So it's not fair to just dismiss the mid-cap space as a selection of small companies with patchy governance, which is what mid-cap was to people 15, 20 years ago. If you want to play some of the meaningful themes that I believe define India going forward, chemicals, China plus one, capital goods, capital markets, those market leaders are present in the mid-cap space, because your large cap space is IT, to some extent energy, and BFSI. So mid-cap is a very important segment, and at 3-4 billion minimum market cap, these are not small companies anymore, and standards have really improved. Now, am I going out on a limb and saying valuations are cheap? No, they're not cheap. I think 6 months ago, people had started shutting down mid-cap funds, small-cap funds, saying valuations are expensive. And we said, we are in the midpoint of a valuation cycle, but earnings quality continues to improve. And I think that is played out really nicely. Valuations aren't cheap today. We are recommending incremental allocations, especially in small-cap, through the SIP route, or telling people come in with a longer horizon, do them in multi-cap. But you can't ignore the mid-cap space. My worry is when people talk about running away from mid and small cap and just jumping to large cap. And I don't think then you capture the Indian opportunity adequately. One of the plays that has worked for us very nicely in the mid-cap space, which has made our fund distinctive, is the whole industrials play. We've been bullish on the manufacturing side of the Indian economy for the last 3-4 years. And that includes your EMS, your industrials, most of those companies, your capital goods companies. And I think that has worked very well for our fund over the last few years, and that position continues to hold.
That's a very, very valid point. Probably a balanced advantage or a multi-cap fund actually could be ideal for an investor with a talka of mid-cap, small-cap, but kind of stability of the mid to large. And probably a lot of individual big HNIs run their own personal funds also in that kind of a process. But okay, let's move on and talk about the economy as well. Radhika, you watch economy very closely. You travel across the country, length and breadth. What is the sense you are getting on the longevity of growth? Professor Krishnamurthy has just tweeted saying that the 7.6% kind of growth which we saw last quarter, after which RBI governor upped their growth guidance here in India, actually may not be a one-off, and now we may be entering into a a slighter, kind of a prolonged period of 6 to 7% kind of a growth. The reason I ask you is that this will get reflected in corporate earnings as well, and hence the markets.
So I tend to agree. I don't think, I mean, the popular phrase of the year on a lighter note was looking like a wow. And I think that perhaps summarizes my thoughts on the Indian economy, because I think the Indian economy is firing on multiple angles. One is that, at this point of GDP that we are at, $2,700, I really believe discretionary consumption is picking up. And as you travel the length and breadth of the country, including tier 2, and I also now interact with some amount of tier 3 India, I think discretionary consumption is picking up. You saw good Q2, but you're going to see even more powerful Q3 because the festive season showed up in Q3. And I think this migration from 2,700 to 5,000 is going to see discretionary consumption explode in a very, very meaningful way. You're already seeing brands that are launching premium products moving towards premiumization, and you're seeing the kind of response and uptick that is happening. You're seeing a revival of the real estate cycle, which was in the dumps for a long time. And that will have a lot of implications, not just for real estate, but even for things like home building. So that is happening. You once were an economy that used to be, Ajay, a services-led economy. We are a services giant, but we were an economy running on a single leg called services. I think now you have a second leg called manufacturing. So you're an economy running on multiple legs. So in that sense, I think you've become a little bit of a stronger economy. And all this is supported. I think Ashwini Vaishnav was saying this. All this is supported very nicely by these 5 years of growth are going to be possible because in the last 5 years, you spent cleaning up your banking system. So you also are at a point, unlike most of the rest of the world, where I believe your banking system is in some of the best health that it could be in. So I think there are multiple things to be excited about from an Indian economy point of view. I think we're about treading the journey that China did 15 years ago, and that's how I look at the next few years.
Talking of China, you also are one of the funds which run a China fund. Are they seeing flows? Does it merit a relook at this time because it's completely bombed out? Nobody wants to go to China. Will it be good time to do a SIP in your China fund?
I think unfortunately flows are extremely cyclical. So, in fact, we've had some smart capital. I am not saying China is turning around, quickly. But what you see in international funds, especially markets like China, we run a US tech fund, is last 1 year performance is a very powerful figure. People come in then. And I always say, come into international funds with a 10-year horizon and remember it will go through the good and bad. Now, when the Indian economy grows through a tough run or our markets go through a tough run, there's a lot less noise about it. But with China, because you don't understand the market, there is a lot more noise. Structurally, it remains one of the world's largest economies and it's available at cheaper valuations. So we do believe a lot of the bad news has been priced in. But I again give the disclaimer that this is a product for evolved investors, not first-time investors. And I've said that for years and years, and I continue to say that. In fact, we've seen some smart capital come in the last 6 months.
Fair point. Fair point. Okay, let's talk about flows then. How are the flows? If SIP flows are any guide, they appear very healthy. In fact, having upward bias. Do you think momentum in flows, domestic flows, will continue? And how are the flows in your own funds right now?
Very good. I think this has been a great year of flows for us, for our funds. I mean, we ended March close to 1 lakh crores. We're sitting on 1.2 plus and growing, and equity continues. We've crossed around 40,000 crores in equity flows. We were 1,000 crores of equity assets, 40,000 crores of equity assets today. We were 1,000 crores about 5-6 years ago. So I think it's been a great run. I think structurally we are at a 17,000 crore SIP book, Ajay. And in my view, 5 years from now, this SIP book size will double. So India will have an SIP base of 30 to 35,000 crores. People think this is a really large number, but I joined the industry 5 years ago when the SIP book was 4,000 crores, and I can tell you nobody thought it would be where it is. SIP has become a structural trend in India. There are people who don't understand the word mutual fund, but they know the word SIP. It's almost become a meme. And it's not just a tool for people making returns, it's a tool for people to save. And the greatest worry in India is always paisa side mein kaise kar le, save kaise kar le, recurring habit, because we are a country of salaried income. I think SIP has solved for that. And so, in my view, you're going to see a book of 35,000 crores by the time 5 years from now. And that, by the way, will also bring tremendous stability to Indian capital markets. I was just looking at an interesting data point, Ajay. 10 years ago, mutual funds owned 3% of Indian equities, India's equity market. Today, we own almost 10%. And I think that has brought tremendous, FIIs are now 15, 16%. We ourselves have brought so much stability to capital markets.
Outstanding, 35,000. That would be a day, yes. That's why perhaps, one of your peers had made a point on the channel that corrections in Indian markets will get shallower and swifter because the massive, cash trove our system is flush with. Before I let you go, one interesting point, Radhika, because this is the first time we are chatting since that development. You actually had an opportunity to figure in, a shark, became a shark at the Shark Tank. How was the experience overall talking to entrepreneurs at every stage, people with dreams, wanting to scale up business models?
I think, Ajay, phenomenal. I was always excited to do it, but I've been an India bull and I've always been long on India. But if you want to feel optimistic about where this country is going, there is no better place than the sets of Shark Tank. And it's a very grueling schedule. But what you see is you see entrepreneurship. You see a lot of the people you talk, 21, 22, 23, building businesses of 20, 10, 20, 30 crores, 50 crores in revenue. You see people from tier 3 towns, tier 4 towns. You see mother, daughter, father, sister. And you see, by the way, so many new consumption opportunities. Many times as a consumer, you think, "Arey, this could not be an opportunity." But you see that people have tried, they've hustled, they've scaled, and they've built a business of some sense. So I really think that India's story is about its demographics and its entrepreneurship. And in some sense, the experience on Shark Tank combines both the magic of young India and the animal instincts that come with entrepreneurship. So honestly, I went hoping to give advice and capital, which I have, but I came back a lot richer in experience and learning from the people I met. And as I said, it's the best reason to be long on India.
Radhika, so has it, kind of got you thinking about your, later avatar career, also perhaps starting a startup fund or an early stage venture fund? At least some flavor you got out of that, isn't it?
Yeah, and Ajay, finally companies are companies. I hope the greatest thing would be that a company on Shark Tank finally becomes a growth equity company, a late stage private company, makes it to the IPO market, and one day becomes a small, mid, and large. So I don't know if I need to start a fund. I think finally we are products of Indian entrepreneurship. Even as mutual fund investors, we benefit and we invest in Indian entrepreneurship. The greatest thing would be to see some of these companies build business the right way, build sustainable business models, and then grow to list on our exchanges.
Excellent. Radhika, always enjoy our conversations. You were, a startup when you started off this company. It was a very tiny one.
Yes.
So you kind of felt it firsthand. Congratulations and good luck for your road ahead as well. Thank you so much for your time.
Thank you, Ajay.
Take a short break on that note. Come back. More news and analysis on the other side. Don't go anywhere.